afternoon on Monday, August 1st, new month. And I am just kind of in the wrapping up some top-down analysis I do for my longer-term investors, and it's a lot of analysis that I do for myself also. So ever since we used to be on the desk and I would talk with a lot of hedge funds, we called this our top-down directional global macro analysis. So we would start from a bird's eye view of the entire world, looking at the different parts: Asia, Europe, the Americas, Middle East, and Africa, and then breaking the world into different parts: the equity markets, bond markets, commodity markets, forex. And then when you look at each sector, even the real estate markets, like I'll show you here at the end of this slide, I'm looking at US real estate, and then also we're looking at some of the ex international real estate, ex-US markets. And kind of what we're looking at is whatever asset or sector or security or even a stock, for instance, we start from the higher time frames, the longer term trends like the monthly, weekly, daily, and then we work our way down to the intermediate term and the micro level. But for the longer term investing, it's important to get growth or a lack of growth, the inflation picture right. But mostly we just want to manage our risk around the global trends. So we kind of look at each area of the globe, try to figure out where the capital is flowing, and that's kind of the analysis I'm doing here today mostly. So, but let's just take a quick look at some of the markets at the end of the day. Dollar today really hasn't done much. Let's see. I talked about last night. I think the dollar is going to hold here around 95. DXY 92 is our long-term bullish trend line, and you can even draw an uptrend line here, kind of coming off these lows. You can also draw a regression channel. It comes in around the same, gives you the same idea, right? So we're in an uptrend here again for the dollar. I think we're going to test 99, 100. So any kind of pullback here, this is 2 standard deviations. That should be about 94 and a half. That's buyable. So if we look at the euro, yeah, we sold Friday into this area, but now we're just kind of consolidating sideways. So I think we might get this move to 113, which is going to be a little tricky, but I'll show you guys how I work a position. So sometimes you have to take your risk or stop out. I would say a lot of novices or amateurs, they just always stop out on everything. They're constantly in and out. They plunge in at one price and they get out, and it's just hard to stick and stop and stick and stop. It's easier to just leave a position, cut most of your risk. But what you really need to do is learn how to work the position. That's what I teach my guys over the intermediate term and long term. So we'll see. This is, again, pi is not one line on the chart. These are areas. So we're sitting right here at pi. It's either we're going to cycle back down or we're going to cycle another measure move higher, like I said, into 113. I kind of went over forex last night. Let's just look at the S&Ps today. We came in this morning, I think we were trading up here around 2172. We talked about in the futures room, if you get down to near here pi, this is probably the best place to take a look at along. I think we were even looking at the 30-minute chart. Yeah. So this morning, this was a good chance to buy day trade. You got a nice micro near-term pop back to the 30. All right, and then the market failed. If you look at the 5-minute, everything's fractal. So, right, what is the 30-period moving average on the 30-minute chart? is the 200 probably. Yeah, exactly. It's the 200 on the 5-minute. Okay, so if you bought well here, you had a chance to let some go into the middle of this wave structure or the bands. Um, you know, you want to be selling into pi, you would want to definitely be selling in the 200. Then you could even look to flip and get short. So anytime price is below the 200, I call that being in the southern hemisphere, and then when you bounce back towards that average, that's always a good place to make some sales. So that was the two main things I saw in S&Ps today. I didn't trade them. The long bond this morning we bought. See that same concept. If you bought S&Ps well, you should have been selling into the 200 above. I bought long bonds pretty well. Sold them out right into the 200 on the 5-minute. All right, made a little bit of money. And then, like I keep telling you guys, gold and long bonds trade very similar. So this morning we came in. Here's pi. Price consolidated sideways. We bought here around pi, and then we took it for about 6 points. Gold futures took half off here, 1358. We put that in the room, and I took the last piece. It was basically the high of the day. So that was just day trade. Intermediate term, I'm still long. I think I hid my drawings. Yeah. So here we can see the intermediate term moves. Sold the high last week. This is my day trade here. I'm still long some futures, and I'm looking for that move into the highs from a couple weeks ago. What else I want to cover? Ultras. Geez, we sold a dead ass high last week. So ultras, I usually like to play those a little bit wider. If we get back here to pi, I might bid overnight. That's 187, call it 25. Or I might just buy 30-year futures, and if it backs up even more on me, I'll look to buy ultras, maybe like 186, 185. But that was a good sale last night, or not last night, last week. And what else I want to show you guys? Let me show you some of this analysis I do for our longer term investing, right? Which is a product I call preferred portfolio. And so let me show you a couple things. I do this analysis every month. It obviously is great for if you have any longer term positions. You have a 401k, IRA, but this is how I manage my longer term positions. So just doing this analysis myself every month helps me keep an eye on what trends and what's bullish and what's bearish, global macro, and you know where the bull markets are in the world. So most of this is all for our subscribers, but I just want to show you a couple things. So this is the world bond market section, and you can see that I go through here, and if you look at all the core bond markets, right, the deep liquid bond markets, treasuries, gilts, you know, JGBs, Japanese 10-year bunds. Okay, the world's still experiencing this low growth, deflationary environment, and rates continue to be in these long-term downtrends. So that's what you can see on that slide. This is a 75 to 8 slide deck product, by the way, also. And it's $50 a month. I mean, it's practically free. So we have no core bond markets or bullish trends as far as rate perspective. And then there's something else I call TMS. You guys hear me talk a lot about that. That's how I identify the true trend. And so here we're looking at the yield curve. US bonds gives you an idea of the yield curve without actually looking at a yield curve chart. And this is just based on price. So this is ultras, which I just showed on the chart, right? 30-year, 10-year, 5-year, 2-year. So you can see across durations right now, the long end, I mean, monthly's bullish, the weekly trend's bullish, the daily's bullish. I mean, everything's bullish, except for when you get to the front end of the curve, 2-year futures, with the Fed trying to talk about raising rates for the last year and a half, you can actually see that the monthly price action of 2s is bearish, as is the weekly, and the daily has been bullish ever since the Fed kind of pivoted last month. But that said, this is another good visual, so you can see where the trends are and what might be turning. And I do this again across all the different asset classes. And then we kind of keep an eye on Euro-dollar futures and 30-day Fed funds. And both of those are kind of pointing towards the Fed doing what they say they're going to do, which is yet to be seen whether or not they actually will raise again. And then lastly, guys, real estate I haven't talked about much in the room, nor I don't even have any positions on right now for a few reasons. But I think it's interesting that when I was doing this analysis today, the international markets have been much more bearish than US real estate. So this is an ETF that Vanguard puts out. It's ex-US real estate. This is a weekly chart. You can see the trend's been down. This is China's real estate. Guggenheim puts this one out. You can see bearish there as well. All right, and then this is the Dow Jones International Real Estate ETF. All right, bearish there as well. You have Wisdom Tree ex-US real estate, bearish trend there also. Now when I flip over to US real estate, I mean there's several ETFs you can look at, but if we just use iShares, the IYR, you can see we're still in a bullish long-term trend. So that, real estate's been bullish really since 2010. It was a little bit late to bottom after stocks did. So I also think that real estate might be one of the last sectors to roll over if indeed, the business cycle peaked last year. The credit cycle starting to pick back up. Consumer cycles late in the cycle. And the job cycle hasn't played out yet either. So if those things do start to roll, the job cycle breaks out, whether you're looking at claims or unemployment, then real estate's eventually, real estate is typically always late cycle also. So it's still bullish for now. I'm not long nor am I short yet, but I'm actually starting to think more on the bearish side as far as the real estate markets. And again, Europe's been more bearish overall from a growth perspective. Same thing with China. Their economies have been more sluggish than ours, and their real estate markets are bearish. So we're still hanging in there, just like the dollar is, and just like the U.S. equity markets are. And then down here we have this Vanguard REIT index. I don't have any REIT exposure right now. This is one I'm actually looking to play on the long side. I got to do some work on what symbols we want to get involved in, but that's what this chart's showing. And you got the home builders XHB, still bullish, making higher lows. If you pull this chart back, it's a little bit more obvious. But again, there's probably some good shorts up here if these home builders, and you get into some specific names, you get back towards the highs from last year. That's another thing that we're thinking about adding to the portfolio is some shorts in housing or home builders. So kind of stay tuned there on that side. And then if we look at the TMS tables, it's the same thing. You can see how strong the U.S. market is. And then you can see the global real estate ETFs have already turned bearish. So this is why I like using this. This is why I developed it. It gives you a nice visual of what's going on out there without getting lost in each individual chart. That's probably a long enough video for now because most of y'all won't get past the first 5 minutes. But guys, if you're new, visit the site jenkinsrm.com. Twitter handles the Jason Jenkins, and you guys can sign up It's free to get into the room. We're adding traders all over the world. I love it. Forex guys, a lot of commodity traders starting to come in now. So it's good. It's a good team we're building. So again, check that out at the site, jenkinsrm.com. And I don't know how many of you are options traders. We also have a options training webinar coming up this Saturday. And if you want info on my options program, that's on the site as well. And that pretty much does it, guys. Well, I'll be back on in the morning. Probably be up trading the currency markets. And have a good rest of your night.